Well, it is the morning of the 1st of November 2021, and it's been exactly 1 year since I shaved off this beard in order to raise some money for the Movember Foundation for men's mental health and suicide prevention. And it's time to do it all over again, so I've got the shaving equipment ready to go, and I'll be back on the video in just a sec. And just like that, we now have a clean canvas upon which to grow a glorious moustache. Now, if you followed along with the channel, this time last year, I ran a series on the channel called Mohnish Movember. Basically, I did one video per week with some sort of Mohnish Pabrai theme or investment lesson or portfolio overview, with Mohnish Pabrai being one of my favorite investors. And Mohnish also being someone who happens to have a glorious moustache. So it was a really nice fit to sort of merge raising some money for a great cause, which is the Movember Foundation, with also getting across some great investment lessons from Mohnish Pabrai. And with the help of you, the subscribers, as well as friends and family, and also me donating all of the ad revenue from the Mohnish Movember videos last November, we managed to raise just under 2,000 New Zealand dollars to go towards men's mental health and suicide prevention. So this year I want to do it bigger and better, and that's exactly what we're going to do. So the team is now expanded from just me to actually 12 of us. So myself and 11 other investing and finance related YouTubers are all shaving down today on the 1st of November in order to grow a glorious moustache and raise some money for a great cause. So I will put a list of the team over here if you want to check that out. And if you're interested in donating, it's going to be kind of the same format as last year. So I'm going to be donating all of the ad revenue from these weekly Movember themed videos. If you want to donate as well, I will leave a link down in the description. I'll actually leave two links. So the first one will be my personal Movember profile, so you can go straight to that one and donate if you would like to. Absolutely no pressure to do so, but that would be super appreciated. And I'll also leave a second link down in the description, which will basically be our team link. So that will be for the YouTube team, aptly named Margin of Shave Tea. Shout out to Karan Ganani for coming up with that name. And shout out to any Ben Graham fans. I'm sure we've got plenty watching the video. So if you go straight to the team page, you can check out basically what we've raised as a team so far. If you want to donate directly to me, that will be the first link, and any donations that come to my profile will then sort of flow through to the team link. So that'll be a great way to kind of keep track on how things are going, and I'll be sure to do regular updates here on the channel as well. And of course, the 12 of us are going to be collaborating as much as possible, so keep an eye out for some live streams. We're looking to do the first one this weekend, so depending where you are in the world, that'll be either the 6th or 7th of November. So that is the plan. It should be a good time, and hopefully we'll raise some good money for a fantastic cause as well. So to the topic of this video, I thought a great way to start off the Movember series this year on the channel would be to kind of go back to our theme from last year and talk about the man himself, Mohnish Pabrai. So I want to basically take a look at all of the publicly available holdings in Mohnish Pabrai's portfolio, look at basically his biggest 3 investments right now, give you sort of an overview of the business, of what those particular companies do, and also sort of my interpretation of what I think the prospects are like as potential investments in those stocks as well. Now, of course, don't take anything I say about these particular companies as a recommendation to buy or sell or anything. This is not financial advice, but I find it really interesting to follow some of the best investors in the world, see, what they've got the most money in, because I find it a really nice place to sort of source investment ideas personally. So without further ado, let's get straight into that topic, and I hope you'll enjoy. Okay, so as of filming this video, Mohnish Pabrai's largest investment is in a business called Micron Technology. It's a stock that he's owned since late 2018, since the 4th quarter of 2018, and Whale Wisdom is giving us an estimated purchase price of about $38 per share. Now, we don't know that those sort of estimated prices are super accurate, but we know he did buy it in the last quarter of 2018. So I'll put up sort of the rough price range around which Mohnish Pabrai bought into that stock. And Micron's a name that actually has a long list of super investors, a little bit like another stock, Alibaba, which I will get to later in the video. There's a lot of big names that are invested in this position. And this is basically what the business does and what the sort of investment case is. Now, I have to give a shout out here to stock compounder Brad Kellner. He's done some great videos on Micron, and that's helped a lot with this research. And Brad is actually also on our Movember team, so shout out to Brad for the great research, and I'm looking forward to the glorious moustache that you're able to produce. So in terms of what Micron does, Micron is basically a memory chip maker. So more specifically, they mainly specialize in DRAM memory, or dynamic random access memory. Basically, they're one of the big three players in this industry. It's an industry that's had a lot of consolidation over probably the last 10 years. It used to have a lot more commodity type characteristics than it does today, which is kind of core to the investment thesis, and we'll get into that in a sec. But if you look at sort of the DRAM industry today, there's really only three big players, and importantly, Micron is really the only one of those three that is based in the West. It's based out of the United States, whereas the other two are actually based out of Korea. And whenever you're investing in a business that does have sort of commodity type characteristics, there's obviously two sides of the equation you need to look at. So you need to look at the supply and then the demand. And fortunately for Micron, the characteristics both from a supply and a demand perspective look quite attractive for this particular company. So if we look at kind of the demand side first for chips and for memory, there's kind of three main drivers. And again, this is something that Brad's covered pretty extensively on his channel. There's kind of three main drivers for DRAM memory for Micron. So the first one is the transition to 5G. Now, when you move from a 4G device to a 5G device, you actually have a massive step up in DRAM memory requirement. So you have about a 6x kind of multiple in the amount of memory required for a 5G device versus a 4G device. So that is a big kind of step up in demand that's going to come from the 5G transition that will happen obviously over the next several years. And you have kind of two other big points that a lot of bullish investors in Micron tend to bring up. So the first one is full self-driving. That is going to, again, require a lot of memory. It's not something that can really be done kind of over the cloud, so it's going to have to be done within the kind of unit, so within the car, I suppose, which is going to require DRAM chips, and also GPUs in data centers. And like I say, this is traditionally a very commoditized type industry. So the only way really that you can have any sort of advantage over your competitors, if you can't sell at a premium, like, you're not Coca-Cola that can sell at a premium to any other cola brand, you have to have kind of something working in your favor. And traditionally with a commodity business, that tends to be just being the low cost producer of a particular commodity. But over the last several years, like I say, there's been a lot of consolidation in the industry to the point now where there are only three big players. So potentially you've got a growing demand, you've got a more kind of rational and consolidated kind of supply side of this equation. So to me, this is a really interesting kind of structural change in this industry. It's not one that I've really been massively able to get my head around. Micron's not a business that is squarely in my circle of competence at all, and I don't have a position in it. But this has really prompted me to maybe look a little bit harder again. So if you look at some of the kind of projections that people are putting out in terms of the cash flows that Micron can produce, things do look really attractive. Micron currently trades around kind of a single digit multiple of cash flows, and they are fairly aggressively buying back stock. I'll put their shares outstanding up on the screen here so that you can see what's happened maybe over the last year or two. And combining sort of the share buybacks with the growth in underlying cash flows from the sort of supply-demand kind of mismatch that's looking really favorable for Micron, you've got people projecting 2025 free cash flows as high as $27 per share. Now, if we compare $27 a share of cash flow to a purchase price of like $38 per share for Mohnish Pabrai, you can really start to see why this was an interesting bet for Mohnish Pabrai to make. And although the price of Micron today is closer to about $70 per share, if they can genuinely hit some of these numbers, that's a really impressive growth in cash flows for Micron. And again, this is one of the reasons that I want to take a little bit of a harder look at it. Now, currently the second biggest position in Mohnish Pabrai's portfolio is a business called Seritage Growth Properties. It's currently about an $87 million position and represents about a fraction under 18% of his overall portfolio. Now, Seritage is actually one I've covered pretty extensively on the channel, again, kind of in conjunction with Brad actually. So we've done a couple of live streams on Seritage, and this is one that I actually, full disclosure, am a shareholder in as well. Now, Seritage is a stock that Mohnish Pabrai actually bought kind of deep in the pandemic in 2020, he was able to pick up shares very close to the bottom of kind of where the stock got to. So pre-pandemic, Seritage was trading at about 40 or 50 US dollars per share. It got all the way down to about $5. So it went down massively, and as far as we can tell, Mohnish Pabrai's cost basis is probably somewhere in the $7 to $9 per share range. Now, in my view, the investment in Seritage growth properties from Pabrai is one of his classic low-risk, high-uncertainty bets. So when we were in the depths of the pandemic, and even now, there is a reasonable amount of uncertainty about Seritage growth properties' future. If you look into Seritage growth properties as a business, basically they are a REIT, a real estate investment trust. So the real estate from Seritage was initially spun out of Sears just before Sears went bankrupt. And Seritage are basically splitting their real estate portfolio into a few different buckets. So in one part of Seritage growth properties portfolio, you basically have a group of real estate properties that look really attractive from a redevelopment perspective. So what I mean by that is previously these were properties that were rented out by Sears. They were paying maybe $4 or $5 a square foot in rent. And many of these properties have sort of been revamped in order to suit a new tenant, and rents in many cases have gone up as high as about $20 per square foot, or even a lot higher. I think they're averaging around $20 per square foot. So right off the bat with some of these properties, you've got like a 4 or 5x or even more in the rent per square foot that Seritage is able to generate. And in other properties, they're doing much more extensive redevelopment. So this might be an old Sears store that they're basically demolishing and they're turning into a life sciences unit, or kind of multi-use retail, or even multifamily housing. And again, basically the idea here is that you increase the rent per square foot, and in many cases you actually increase the number of square feet available for rent. So for example, if you were to just take a kind of Sears box, a Sears store, demolish it and kind of build vertically on that same piece of land, you suddenly have a lot more kind of square footage able to be rented out. And if you're also getting paid a higher rent per square foot, then that does very, very nice things for your revenue. And finally, Seritage have kind of a basket of properties that are not attractive for redevelopment. So they don't think the numbers kind of make sense, and effectively they are kind of selling off those properties in order to fund the properties that do need developing. Now, where the whole kind of risk and uncertainty thing comes in with Seritage is that we really don't know for sure what a completely redeveloped portfolio looks like for Seritage. We don't know exactly what the final square footage is. We don't know exactly what the final sort of average rent is going to look like, and we don't know for sure how many properties they're going to have to sell. So it can be a little challenging to kind of figure out what the end game does look like for Seritage. So in that kind of respect, it is very high uncertainty. And that is certainly a reason why a lot of people are not interested in this stock. But we know that Mohnish Pabrai has this really nice mental model of things being high uncertainty, but not necessarily high risk. So when Brad and I have done some of these live streams on Seritage, Brad again did some great work. I'm stealing a lot of stuff off Brad here for this video. Thank you, Brad, if you're watching. Brad did some great work basically doing a property by property analysis of what that piece of real estate is worth. And if you take all of the value of those real estate properties, you subtract the debt, Brad was basically landing on about $35 per share as sort of a liquidation value. If you were just to sell everything that Seritage owns and return all the cash to shareholders, you were getting about $35 per share. I think Seritage trades at about $15 today, and Mohnish Pabrai was buying under $10 per share. And there's other investors that have gone through a similar exercise with Seritage as well. So you have people like Matthew Peterson, whose annual meeting is here on YouTube if you want to go and check it out. He's gone through and done a conservative valuation of each property that Seritage owns. Again, he's done a conservative estimate of how much they're going to have to spend in order to sort of redevelop the properties that they do want to redevelop. And again, he's landing on a 2025 valuation of also about $35 per share. And finally, the third biggest holding in Mohnish Pabrai's portfolio right now is in Alibaba. It's currently about a $59 million position and represents about 12% of Pabrai Investment Fund's portfolio. Now, Alibaba has been one of the most hotly discussed stocks that I have ever seen on YouTube. I think maybe something like Tesla a couple of years ago was a really controversial one that arguably is still very controversial. And Alibaba is probably the closest thing I've seen to a stock that is almost equally controversial and just gets talked about all over the place. Now, Mohnish Pabrai is the second, I think, big investor that I saw invest in Alibaba just earlier this year. So firstly, we had Charlie Munger, the GOAT, back here, poor Charlie's almanac. We saw Charlie Munger buy into Alibaba via the Daily Journal Corporation. We then saw Mohnish Pabrai also buy into it. We then saw people like Guy Spear, Phil Town, Bill Miller, a long list of other super investors by Alibaba as well. And Alibaba is a really interesting case study because if you look at the underlying business, you basically have sort of three core segments as I view it. So you have their core e-commerce business, which is still the vast majority of their revenue today. So that includes really big e-commerce sites like Tmall and Taobao. You then have a 1/3 ownership stake in Ant Group or Ant Financial, which is a very large financial services company under which Alipay falls into that group as well. And then you have a really fast growing cloud business, which is compounding at about 50% per year, but it's only kind of a small slither of their revenue right now, and it's only just reaching profitability. And if you look at the underlying revenues and cash flows for Alibaba, it's continued to compound at really fast rates. Yet all of a sudden you've had the stock kind of follow along and then suddenly just crash and completely diverge from the underlying results of the business. And anytime you've got a business that's growing really fast and a stock that's declining and valuations start to look attractive, that's when, you know, value investors like Mohnish Pabrai and Charlie Munger clearly start to get very interested. Now, there are some things kind of hanging over Alibaba that are kind of the reason that the stock has been down so much. You have regulatory crackdowns on tech companies from the CCP, from, you know, regulators in China. You also have this sort of looming threat, I guess, of delisting from some of the US exchanges, which Alibaba has kind of come out and said they will make every effort to comply with the things they have to comply with, and, you know, aim to remain listed on the current exchanges that they kind of sit on. And I think you just kind of have a general fear when it comes to investing in Chinese businesses. There's a lot of at least perceived kind of uncertainty if you are a US investor or investor kind of anywhere but China right now. But again, if you focus on the business and focus on current valuations, I mean, I've done intrinsic value videos on Alibaba, and I'm getting to sort of the mid to high $250 per share, or per ADR technically, range just purely for the e-commerce business. That's before you even add in the stake in Ant Financial or even the valuation of the cloud business, which is not yet contributing any cash flows to Alibaba. So that is it from me for this one. Those are Mohnish Pabrai's three largest investments right now, and hopefully that gives you a nice little overview of the business and where valuations currently sit for each. So I do hope you enjoyed the video. If you did, please hit like and hit subscribe. If you're interested in contributing to the Movember campaign in any way, like I say, no pressure at all. You can support by just liking the video and leaving a comment or something to push this video out a little bit more widely, because I'm going to be donating all the ad revenue from this one as well. But if you do want to make a direct contribution, the links will be down in the description below. But like I say, that's it from me for this one, and I'll see you in the next video. Cheers.